Emily Wilkins tracking the latest in Washington ahead of the shutdown potentially tomorrow night. Stocks are hanging in there, though. Investors say we're not going to be fooled by, we're not going to trade off of a shutdown. Peter Bookvar wrote it in the note this morning. We've heard it constantly, though it could mean we don't get a jobs report on Friday, which would have an impact, I think, on trading.
Yes, indeed. Let's get to the judge in the half.
Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, an upgrade for global equities. Goldman Sachs looking for a year-end rally, which means we'll discuss and debate that with the investment committee. Joining me for the hour today, Joe Terranova, Jenny Harrington, Steve Weiss, and Bryn Talkington. We'll check the markets here. We do have the NASDAQ and the S&P are green. You see the Dow is a little bit red. You have gold extending its record high, getting closer to 4K. Bitcoin's about 115K. And it is Goldman looking for that year-end rally. Quote, we think that good enough for earnings growth, Fed easing without a recession, and global fiscal policy easing will continue to support equities. Bryn, you like the call?
Yeah, I mean, the trend is your friend, right? So we got to dance until the music stops. I just think that because we do have the Fed now starting to cut rates, which is positive, earnings we've talked about all year have continued to surprise on the upside. I think that the tech spend is massive. I think that the data center growth as part of GDP, it's close to 35% of GDP the last few quarters. Plus, we're going to get a lot of stimulus next year with the big, beautiful bill starting to work its way through the economy. So I think it's hard to be negative at this point with the backdrop that I just walked through.
Yeah. Steve, earnings, Fed easing. That's the bull thesis right there in front of you. Anything to hit at on that?
Well, let's simplify it. Don't fight the Fed. So whether the Fed goes in October, whether they go again before the end of the year. And there's some debate about that as the economy continues to look strong. And we've seen somewhat a moderation in inflation, meaning it's not ticking up. The last couple of numbers came in okay. So, look, while I don't think anybody's happy with valuation, we heard Tepper come on network last week and say that. So this is truly a hated bull market because valuation is where it is. There's no reason to believe that as we go through earnings and we're not seeing the revisions, that it won't take it another leg higher. And I think that's what will happen.
But that'd be good.
That'd be very good.
You know what I'm saying? If earnings are the thing that takes it higher?
Exactly.
You're not just talking about multiple expansion here. You're talking about earnings growth.
And we're not talking about earnings growth based upon an easing by the Fed. So when you add the Fed easing, you'll potentially put that in hyperdrive. And then we can talk about a year out. What's it actually mean for inflation? That'll be very inflationary. But now you got to dance while the music's playing.
Yeah, market doesn't care about anything way out, right? Tunnel vision. You play the cards that are in your hand, and the hand looks pretty good, doesn't it?
Well, the hand looks pretty good in the short term. And I think the most hated bear market, that's where I sit. It's the most hated bear. Oh, sorry, the most hated bull market. Thank you.
You talk about it like it's a bear market, but actually it's been a bull market.
Well, it's uncomfortable. And I don't know anyone who's not uncomfortable. And so the way I look at it is clients are constantly asking me, is it too high, blah, 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 what else should I be in? But the thing is, there's not much else to be in. What are you going to be in? Cash that has a 4% yield right now, and that's going down. You look at bonds, those yields are way down from 5.5% several months ago and a year ago. Those are down to 4 and change, and those yields are probably going down. I don't think it's going to drive the prices of bonds up huge because I don't think it's going to be a huge decrease in bond yields. But you look at it and you're like, okay, well, even the companies with low multiples, even the value stocks, they still have decent earnings growth out there. And I think you can't fight that decent earnings growth. Lowering interest rates, those are just forces that support the market.
So why so uncomfortable then?
Because
it's not like it's going up for no reason.
You know why? Because we were up 26% last year, 20+% the year after that. Before that, we're trading at almost 23 times earnings. It's just kind of too much, and it feels uncomfortable, and it feels frothy.
Two handfuls of stocks are trading at 23 times earnings.
Fair. But also that concentration in the S&P 500 makes people queasy. And I think that a lot of people are kind of all in on the S&P 500, and that concentration, plus the multiples, plus the couple of years in a row, plus we all have PTSD from when you have a couple of big up years, like something just happens and the market backs off. So there's a lot out there. There's geopolitical unrest. I think we're all freaking out a lot, at least we should be, about AI taking real white-collar jobs. None of these things are super near term, but they're out there and they're lurking in people's minds and making them uncomfortable. But at the same time, even me, I look across the whole asset class spectrum and I'm like, equities are kind of the only place to be right now.
Yeah, I mean, S&P's tracking for a 7% gain, Joe, in the third quarter.
So everything that Jenny just said that you would be troubled by, you could have said that on August 31st.
Yep.
And in the
And
month
I did.
And again, this is not personal
No, I
directed
know.
towards you, but this is the general overall perception of the market. The interesting thing about that is we had a lot of skepticism moving into the month of September. Where are we on the other side of that? The S&P's up greater than 3%. The Nasdaq's up 5%. So I think that caught people off guard, and I think that's important to understand when you're thinking about positioning and where we could go from here. Over the next couple of weeks, we're going to be waiting on earnings. This week, the focus is going to be on the labor report. You have the end of the quarter. So this week, I don't know that you have very much of an edge, but I think overall the secular bull market is in place until you tell me that earnings are going to defeat them. In addition to that, we're talking a lot about the Federal Reserve. There's also the understanding that global central banks, 86% of global central banks, by the way, their last policy action was a rate cut. So it's not just here in the U.S.
No, that's why Goldman today makes the call on the global equities to overweight. And they do mention global fiscal policies. And so they're in line with what you're talking about.
But there is still the remnants of, I think, the last 5 to 7 years where you have skepticism and you have underweight positioning as it relates going outside the U.S. Even myself personally, I'm not aggressively going to look outside the U.S. when I should be actually doing that. I've done that earlier in the year with the EIS, the Israeli ETF. That's the one area outside that I got some overseas exposure. But domestically, U.S. equities are giving me enough that I'm staying anchored there. And I think that's one of the reasons why you could see this run outside the U.S. last a little bit longer than people anticipate.
Jenny makes a good point. I mean, Doug McMillon, Walmart CEO, like, I can't think of a job that's not going to be impacted by AI. Yeah. Now, I guess we'll worry about it when we have to worry about it. Market doesn't seem to care about really anything other than earnings are good, so I can justify where we are, and the Fed's easing, so I can justify why we're going further.
I think the trouble with thinking about AI and the jobs that it's going to take and how that's going to impact the economy in the long run is that it's not going to be an overnight landslide. It's going to be a slow creep. So almost everyone I know right now who has a kid who's just graduated from college in May, they're sitting at home twiddling their thumbs, and they're in final rounds of interviews. And the big companies, like big major companies, are waiting to make that final hire because there's so much out there. So my thought on how that plays out is we see it creep. And we see the unemployment rate creep from like 4.2 now to 4.5.
Right, low hire, low fire. That's sort of the environment that you're in, right? Companies don't really know what the impact of AI is truly going to be on its workforce, so you're not really hiring as many as you normally would. Thus, you still can't get rid of maybe as many people as you otherwise would because you just don't know.
And then at the same time, when you asked how far does the market look out, I think that lens has shifted to a much closer looking out than it used to be. When I started, I always thought the rule of thumb was the market looks out 18 months-ish. Now I think people say rule of thumb is 6 to 12. Frankly, to me, it feels like 3 to 6. So if you're thinking the market looks out 3 to 6 or even 6 to 12, it's very hard to digest the fact that those job losses from AI are going to play out over the next 5 years and have a compounding painful impact.
So you know what you do? You know what you do? You continue to buy AI stocks. Yeah. That's what investors are doing. It's a tried and true place to be. That's why the trade continues to work better than anything else.
But I think the challenge there, too, is going to be the AI stocks right now, the primary AI stocks, many of them have pretty rich multiples. The first derivative AI stocks also have rich multiples. And when I think broadly about how this is going to impact us, everything can benefit.
But you know
from a corporate margin perspective. But everyone's going to benefit.
You understand this. I know you do. Right now, the market is not focused on what the multiple might be. The market, you have this force of momentum, and it's just, it is what it is. I mean, we could sit here and we could say we have all of these deteriorating potential fundamentals. They are concerns for 2026. Right now, the dominant force is that flow of capital that we characterize as momentum.
Well, that's why I tried, Bryn, to bring it that direction, because the Nasdaq is leading today. It's tech and comm services. NVIDIA, let's check it right now. NVIDIA is not at the highs of the day, but it was up better than 3%. It's up 2% now. The target goes to 220 from 205, reiterated by Jefferies. Chips across the board today. NVIDIA, Micron, AMD, Broadcom, they've all been higher. There are other names you could point to as well, but that's where the action is today.
Yeah, and, Jensen this weekend was on one of your besties podcasts, Brad Gershner. I highly recommend people listen to it. And when, Jensen's talking about not the billions, but, trillions, which is a crazy number because a billion seconds is 32 years and a trillion seconds is 32,000 years. And so while I've always said Jensen is the master salesman, at the same time, he's delivered the goods. And I think if you can get past the circular financing that's happening with an Oracle and an OpenAI, which I don't own either one, I think that you still feel like the spend is massive. And to me, as long as, the hyperscalers or cloud service providers don't do an Oracle and go negative free cash flow, which I don't think they're even, that would be like almost impossible at this point. I think we're good. I think if we continue to see this, strange financing, I would get more concerned. But as long as it's still going to settle around Oracle and OpenAI, I think the NVIDIAs, the Broadcoms, the Vertivs are just going to continue to move much higher.
Weiss Bernstein, I think, sums it up pretty well. You do have huge numbers being thrown around. It makes some people concerned. It's almost in a bit of disbelief, the level of investment that you're having from these various businesses. But they say, demand looks off the charts. That NVIDIA's OpenAI deal and Broadcom's new 5-year target suggest we still may be early. And we're hard-pressed to think of a better use of NVIDIA's cash flow. At this point, they argue own both, NVIDIA and Broadcom. Don't pick between the two. And others would probably say, yeah, own those two and.
Yeah, look, I mentioned this last week. The valuations in the public markets pale in consideration and relevance to the private markets. So you take a look at companies like NVIDIA, for example, investing $50 million in this robotics company, Humanoids, that didn't have a prototype. They just did a round a year and a half, 2 years later, that went from $500 million to $38 billion and still don't have commercial revenues. So that's kind of bizarre. So look, I think that there will be a lot of overspending and there will be a lot of companies that won't succeed, that will go by the wayside, maybe not to the extent that we saw in the dot-com bubble. But right now, the momentum's going, and this is such a game changer that it's going to continue going for a while. Now, I think where the biggest risk to the economy is in the people that don't make a lot of money, that live paycheck to paycheck. Because those aren't necessarily very skilled jobs, and that's a big part of the economy. And we've seen that. We've already seen them under pressure over the last 6 months. However, the upper ends of the economy, working in the engineering positions, professional positions, even though they will be under pressure, are carrying the economy. That's where all the spending comes from. So those, to me, are sort of like the worry points. When do you tip the edge? We're seeing bankruptcies pick up in some of the private credit. So those are all warning signs. But I think we're going to keep going, and when they hit, they're going to hit hard.
That's a front-page story of the Journal today about some of these bankruptcies and what's happening in the credit markets. Maybe it looks great, maybe too great.
Yeah.
Howard Marks made some interesting comments in that article as well. Back to chips. Lam Research upgraded today, Joe, to buy target to 150. Was $100 at Deutsche Bank. What do you think about that name?
I think Lam Research and KLA Corp, these are the two semi-equipment names that you want to own here. They are delivering on all the fundamental metrics that you want a corporation to be able to deliver on. They're participating in the build-out with the partnerships with NVIDIA. Applied Materials is the one name. We used to mention the three of them together. That's the one that kind of has struggled somewhat. So I think right now these are the two of the three names that you want to kind of focus on.
The president is talking about tariffs on foreign electronics based on the number of chips, according to Reuters. So on a day where we're talking about potential tariffs on here, there, and everywhere, Weiss, your Taiwan Semi is among the biggest non-U.S. chip makers, as people know.
Right.
You've taken your position down a bit.
I have.
But you do have considerable exposure there.
It's still my largest position. It's just gotten too big. I bought it early, I've owned it for a number of years. But the incongruity in the market today is that you see the defense stocks moving up. And why? Because we're increasing our missile production. Part of that's replenishment from the wars that we've been sending to in Ukraine and helping Israel out.
So that's why you have aerospace and defense names up today.
Right.
Like the Lockheeds, the Northrops.
Right. But the primary reason that's being attributed to the increase in production is potential for a conflict in China. So the incongruity here is that Taiwan Semi, with most of their operations in Taiwan, is at ground zero for that conflict, yet the stock is up today. That continues to be a concern of mine. Now, in terms of the onshoring, for like Taiwan Semi and Micron, they're having their own issues, because the issues is that when they announced these plans, these multi-billion-dollar plans to build here, they had assumed that they'd be able to export from this country to other countries their products. Now they're downsizing those plans because they won't be able to, because those will be tariffed also on an outgoing basis.
I just don't think the market at this point takes much of the tariff stuff seriously.
Well, it doesn't take tariff stuff.
I think,
like
or the China stuff.
No, but if you talk about, all right, I'm going to put tariffs on every movie that's made outside the United States.
Crazy.
You see initial moves, like you put up Netflix, for example. You would see an initial move on the headline itself, and then the market's like, yeah, but I don't really believe that it's probably going to happen. So there's the dip down earlier this morning in the red, and then you have the green. My first instinct was say, oh, well, if that's going to happen, then look at all the studio-related names, and they're probably all going to be down. In fact, they weren't. It's just notable that, Taiwan.
And there are no details, because if you make a movie and you stream it from overseas into the U.S., they don't know if that's going to be tariffed or not.
I just don't think the market believes that what almost anything on that whole line item is going to happen.
Right. Complacency. But let me just finish this, Jay. The complacency, I go back to China. If China does go to war and does seek to annex Taiwan, that hits the global economy. It doesn't just hit the U.S., doesn't just hit Taiwan. But the market's complacent. There's nothing built in for that risk. I don't know if there should be, but they say they want them, and they haven't backed down from that.
I think we have 6 weeks where you're going to hear a lot of mercurial statements being made about the suspension of reciprocal tariffs with the Chinese. Remember the Geneva conference in May. November 10th is the date. So you're going to hear a lot of back and forth negotiation. I think the market's going to have to deal with it. I think Scott's right. I think the market ultimately brushes it off. But those headlines over the next 6 weeks are going to be present.
Ultimately isn't really the issue. It's in the here and now, the market's brushing it off. Who knows what it ultimately does based on whatever might happen or what might not happen. But I think the market's tired of we're going to do this here, we're going to do that there. It's like, all right, well, I don't really believe it, so I'll deal with it when I have to deal with it, but I'm not dealing with it now.
I think a little bit differently, which is I think the market hears these tariff headlines and puts it into one of two buckets. One bucket is plausible, and unfortunately a lot of the tariffs on things like Whirlpool and Stanley that are in my portfolio, plausible. Like those are concrete and taxable. Things like electronics with X amount of chips, it's like that bucket is ridiculous. It doesn't seem like it'll actually play out. It's too hard, it's too convoluted. The movie stuff goes into the ridiculous bucket, but concrete things go into the plausible bucket, and then the stocks are treated accordingly. So unfortunately for things like Whirlpool and Stanley, I've had a lot of pain because those tariffs are implementable and plausible. But other areas where it's just silly, that's
you got to be in the right tariffs versus the wrong tariff buckets.
Yeah, and then in the right, whichever we want to consider right or wrong,
right, but you know what I mean.
I make a related
ones that impact
tariffs.
Stocks and what don't.
There's another tariff-related issue, which is the $100,000 charge for H-1 visas. So what that's going to do, it's going to limit the pool of engineers coming over from foreign countries, India, et cetera, and that's going to raise the costs for wages in the U.S., number one. Number two, it's going to, on the other hand of it, on the other side, it's going to strengthen the franchises of the big cap tech, because startups can't afford to pay that $100,000. So there's a lot of crosswinds here, to your point, Joe, that we're going to hear about in 6 weeks.
All right, let's hit another name on the move today. It feels like a stealth mover. Let's look at Robinhood intraday. It's ripping today, Bryn. So they roll out their new, there it is, they roll out their new banking offering, but maybe more substantially, the Kalshi prediction market, in which Robinhood has a relationship with, a partnership with, their volumes were off the charts between college football, pro football, Ryder Cup. You still have Monday Night Football, to deal with. Some are estimating that Robinhood users accounting for 25 to 35% of the daily volumes on Kalshi and the prediction market. Bryn?
Yeah, I mean, just think of it as a custodian, right? It's the most poor level. It's like the stickiness of Robinhood. The other custodians can't even touch that. They're open from 8 to Central Time, 8:30 to 3. And so I think, Robinhood, it's an engineer-based company, just continues to innovate so quickly. And I just think they're just cleaning everyone's plot. So between stocks, between crypto, between this type of betting, you're just on that platform all the time. I just think it's such a unique type of custodial that the other custodians would love and wish that they would have thought of. But Robinhood has such a big advantage from the legacy custodian.
Yeah, I mean, it hasn't been a stealthy move in the last 3 months. It's been anything but. It's made a huge jump with other, names in the orbit of, the Palantirs and momentum names like that. But this is a big move today.
It is a big move. There's a little of a bit of a follow-through effect from joining the S&P 500. It joined, I believe, on September 22nd. So there's a little bit of some capital flow coming from there. I think it's crypto-oriented. I think it's strong engagement in the trading and investing community. I think it's telling their story. They've done a really good job of going out and telling what their story is, what their vision looks like. It seems as though the leadership has matured from the standpoint of understanding they really need to bring in a lot of intellectual capital. They have done that. So right now, it's in the sweet spot. Momentum, yes, is fueling it. There's some fundamentals underneath the surface as well. But I want to be clear on one thing. If you were to see a rollover in crypto, you're not going to see a relative outperformance on the part of Robinhood. It's going to go lower.
They have other levers. It's not a straight crypto play.
No, they do, but you have to make the point that if you're long the stock and you're seeing it at 130, 161 at an all-time high, you can't say to yourself it's going to be completely impervious to the fact that if crypto does roll over 15, 20%, that Robinhood can maintain these levels. You just kind of have to be aware and size your positioning accordingly.
Speaking of levels, the biggest LBO ever, $55 billion, the acquisition, of Electronic Arts. You own the stock, and you haven't owned it that long.
Listen, Josh and I were on the golf course on Saturday.
Josh bought it after you did.
And we were talking about it, and he looked at me and he said, we both look like heroes, and neither of us bought it for the reasons that the stock is up that much. We bought it for the fact that strong momentum was in play. They delivered on.
Be an LBO
no, we didn't think it was going to go out at a $55 billion valuation, and Jared Kushner
$210 a share.
Saudi Arabia was going to come in and buy it. So there are some that have criticized the deal and said maybe the deal adds upon some debt. It's moving to, private markets right now. So for us as owners of it, we're happy with it. But I'm not going to sit here and say, hey, we successfully navigated what was an LBO. We bought it because of momentum.
Isn't that a comment on AI that you would think, software companies are going to be disadvantaged because of AI, and that companies like this with content can be disadvantaged of AI? They're obviously looking at AI and saying, this is much better for us in the future because we'll lower costs and create more product. So I think that's kind of interesting. That's my takeaway from this.
Joe, how do you trade it? If it's not closing until the first quarter of 2027, what do you do with your holdings?
Well, that's where all of the M&A arbitrage, and there's a lot of people that are out there still playing that game and doing really well. Well, I'm not going to do anything until the end of the quarter, until it moves. We rebalance on a quarterly basis. I don't know what Josh is going to do. We didn't discuss that. We were too busy looking for our balls in the weeds.
China Tech rallying today big time. Weiss, I'm curious your take on this, because Goldman had an interesting note today talking about what was an uninvestable thesis in the hedge fund community. You included, right? I mean, you had come to the perspective that these were not stocks to buy anymore, and you had exposure there over the years. That the tide has now turned because of AI and the fact that China's not just going to cede everything to the U.S.
Yeah.
If you look at the 3-month gains, can we show some of these names? I think we have this. Alibaba's up 57%, Baidu 56%, Tencent 30%, PDD 25%, the K-Web overall, which is the ETF composing these China tech names, up 22%. What do you think?
Well, I think I feel like a complete moron, despite having a stock whisperer who's one of the best ever, not whispering in my ear, yelling in my ear to buy these. I had a dalliance with Baba and then quickly got out. So So it's probably sustainable. They're not overvalued now. They're overvalued historically to what they were, particularly BABA, and they've got so many levers to pull. And what's changed now is that the Chinese government's behind them. They're driving innovation because they want to bring all the innovation and production on their shores. So I think they still have some legs going forward. My concern had been a delisting of these, of these companies. That never happened, and I just don't see it happening at this point.
Hey, just a quick note. Josh has just texted saying that Josh is going to ring the register on EA. So.
I think that's a good trade.
It makes sense. The risk reward's untenable at this point.
He'll be on tomorrow. He can give you a little more color into that. But he's ringing the register, and you're sitting tight.
They can't do anything. Rebalance, reconstitution.
You should have just bought it personally.
No, I want other people to make money before myself.
Oh, so generous.
Yeah, okay.
Such a mensch.
Especially you, Steve.
Thank you, Joe.
Yeah, okay. Up next, we're back. Jenny has a move to tell you about. Star Bulk Carriers. You sold it.
Yes.
Why'd you do that?
Oh my gosh, this was such a home run of an investment. So we bought it in 2021, and we bought it around like 18 and change initially. We just sold it around 19 and change, like at the exit price. But here's the awesome part on this. We actually had 117% total return in those 4 years because they were paying out huge, huge, huge dividends. So when we bought it, dry bulk shipping rates were high, and the inventory of dry bulk ships was reasonably low, so they were just returning cash flow to the shareholders. They ended up making an acquisition, slightly changing their capital allocation priorities, not having this juicy dividend, and that's fine. I made my money and then some on it, so I sold it. It's a source of funds, and I wish I could tell you what I'm buying with it, but I can't because I'm not done buying it. So when I'm on next week, I'll tell you. But I'll give you a little sneak peek, which is it is as interesting and exciting, I think, as Star Bulk was when I bought it with those huge dividends. This one's boring. It's a consumer staples name that trades at a fraction of the multiple of the S&P and has a 4 and change % yield. So you can kind of see where my head's at, which is take risk off the table and move into something that's more secure.
I was going to say, so
it's not Costco or Walmart.
It's not Costco or Walmart, no.
It's not.
But it is just a boring consumer staple company. And it goes back to my opening conversation about I still want to be in stocks. You know, I could have sat in cash, I could have bought a bond, I could have bought a preferred, but I'd rather have a stock that has a 4 and change yield with GDPS plus growth that trades at a fraction of the multiple, of the market multiple. That's still compelling. So.
Weiss, do you have any thoughts on that?
Well, I've got
Staples play?
Yeah, I mean, first of all, in carriers, I mean, volumes continue to be down.
Yeah.
I mean, rates down about 75% year to date. You know, I look at the staples, and they're never cheap. And, you know, I'm just never comfortable owning because those valuations when they have really punk growth overall.
Yeah, you're making a blanket statement.
Yeah.
Yes, I am. So I'm on track to the group, and I'll continue to be on track because I see much better alpha elsewhere, such as in technology names.
Right.
So I don't feel I have to broaden. Where I have broadened is like in a Caterpillar, for example, which we'll talk about later, where I think the economy lowering rates will drive business and the onshoring.
But just to be clear, like I would not buy the consumer staples index right now, or sector for that. I would look through and say there's certain names that kind of got punished because of tariff worries.
Clorox?
No,
Kimberly
and I'm not going to tell you. I'm not going to tell you even if you get it right.
B&G?
I'm not going to tell you. What's that? I'm not going to tell you.
Helen of Troy.
Oh, come on now. All right, I'll say one of those might have been right. But if you look through them and you say it does have 6% growth ahead, 6% dividend growth ahead, it has a decent yield, that's okay. I'm with you. I wouldn't want to buy the group broadly. I think a lot of them still have rich multiples.
When are you telling us?
I'll tell you next week when I'm on.
Okay.
Yes.
It's not a staple, but we should hit Williams-Sonoma and RH for that matter. We did mention tariffs and the president talking about furniture tariffs. He says, I will be imposing substantial tariffs on any country that does not make its furniture in the United States. So we're looking at those names. Joe, you own Williams-Sonoma.
Yes, we do.
Jenny's got Ethan Allen.
But Ethan Allen, very different chart than Restoration Hardware and Williams-Sonoma, because, and don't forget the investment thesis there was that 70% of their manufacturing is in North America. And so if you look at Restoration, that's down like 60% or more from its high. Restoration's super tame. The CEO was on just on the show before us talking about how they manage that, why they set the business up that way. And it's interesting to see now they finally get a little bit of a benefit. Sorry,
I love how we look at the charts when it benefits you. Now we're looking at charts. The chart does look good, though.
But it is interesting because this one's insightful. Like, if you have 3 furniture companies, Restoration, Williams-Sonoma, Ethan Allen,
what about Wayfair?
Okay, fine. Why is one not down so much? The reason is it's a totally different business model underlying it. By the way, Ethan Allen also has no debt, right, which is interesting. They pay a 5.4% dividend yield that's got, I think they earn about $2 of dividends. It's a $1.12 dividend yield. Sorry, $2 of earnings, $1.12 dividend yield. It's just a totally different beast than the other.
Have you been reading Buy High, Sell Higher?
Stop it.
All right, Williams-Sonoma, we bought it at the end of July. We bought it because the company is delivering strong operating margins. The problem is, and you can't ignore this is a challenge for them. The production is coming from Vietnam. It's coming from Malaysia. It's coming from Indonesia. Jenny is spot on. You want to be able to, if you're going to be investing in these names,
show me 3 months, please.
Identify exactly which one. We've given back. We were up. We were up in it. We're basically giving it back where we were. What's interesting is on Friday, everyone was buying Lazy Boy because the majority of production for Lazy Boy is in the U.S. I think it's like 70%.
And it's comfortable. I love a Lazy Boy.
All right, let's get the headlines with Angel. Outperform at OPI. What do you think?
Look, I think that this is, it's clearly going to benefit from the onshoring. And that's exactly what's occurring here. So it's going to get a lot tighter. We see we are invested in some companies that have skilled labor as opposed to labor that's not certified for electrical and all that kind of stuff. And it's just very, very tight, exceptionally tight, where these companies are actually developing their own schools to certify electricians, plumbers, et cetera. And that's going to mean that Caterpillar is going to have more work. It's going to sell more equipment. So I think you have to stay with this one. And Deere I go back and forth on, frankly, haven't gone there. And to me, it'd be a little bit like Caterpillar. So I'm not going to do that one, but others may.
Okay. Brand, you have a final trade. Let's talk about it.
Yeah, ETHA, it's down about 15% from its August highs. It's right at support from its 2020-24 highs. So I think it's a good setup for Q4 risk on.
Where are you on Bitcoin, Weiss? What do you?
I'm there. I'm not surprised by it declining after the big run-up. I think it'll reassert that.
You're there through what again?
IBIT.
IBIT. Okay, that's what I thought. Well, you're also in Leidos, and that's why it's your final trade, right?
Look, the world's a tough place, and with cyber making the Chinese government spends 600 times we spend on cyber. Leidos has a great cyber offering, security offering, and I just think defense companies are going to continue to see increased valuations.
Okay, thank you very much. Many are on the move today. In fact, we're showing Jenny because Charles Schwab is you.
Yep. Schwab, fastest earnings growth in the financial sector. They benefit from high share prices, Fed rate cuts, and it trades at 18 times earnings.
All right, well, there were a number of positive calls today on some of the regional banks as well. And speaking of the big banks, Morgan Stanley, Joe T.
One of the Fin 5, Morgan Stanley. I think you could pick any of them, but I like what Morgan Stanley's doing here with the wealth management.
All right, good stuff. Thanks, everybody.
Hello, welcome to Blue Cloud Trading. I'm George. It is Monday, September 29th, and it is 4:44 p.m. The market is closed right now. We're going to do some analysis. We're going to take a look at the markets. We're going to also take a look at a number of the stocks that he talked about on today's halftime report. In fact, out of that list, we're going to go cover about 19 stocks. You can see the list right here on the left-hand side. What I've done essentially is I've highlighted the strongest ones with a little blue flag on the left, and the weakest ones are at the bottom there. I'm going to explain why those are weak and why the ones at the top are the strongest. We're going to take a look at the index ETFs like the SPY, the QQQ, the Dow, the Russell, the Euro Stocks 50. We're going to look at the Tesla, Apple, Meta, and we also have a few requests from our members, Lyft and Devon Energy. So let's get started first, folks, with looking at the markets. What happened today? Not a whole lot, honestly. The Dow Jones was up just 0.15%. You can see here it actually opened up in the morning up and then dropped, basically zigzagged a little bit under there, and then basically closed up just 0.15%. NASDAQ also gapped up and then started to, basically drop. It did close up 0.48%. It was up the most today, so NASDAQ did well. S&P 500 also gapped up in the morning, and then you can see here a series of, actually what happened was it created this like this like ceiling right here. So price did get stuck in that area. It was only up 0.26%. And then the Russell 2000 also gapped up and then dropped, only up 0.12%. And you can see that where it ended up closing. Let's take a look at the heat map. This is going to show us the individual stocks within the S&P 500. And here's NVIDIA up 2.05%. Microsoft was up 0.61%. Amazon 1.09%. Google was down 1.14%. Broadcom was down 1.98%. Energy stocks did not do so well today. The utilities did well. Healthcare did well. Financials were mixed. All right. And if we look at the sectors, let's do that. Let's zoom in a bit. And you can see that basic materials was number one, up 0.83%. Then consumer cyclical, technology and utilities. Energy down 1.71%, big drop in energy. If we look at the 1 week performance, energy was the top performer last week. Is money coming out of energy? That's a good question. Utilities was the second best, sector. And you can see here, it's up 0.46%. So let's get into these. We're going to start off with the S&P 500 first. If you're new to the channel, we're using something called the Ichimoku indicator. Why is it important to use technical analysis? Because it can help give us some insights about what is going on as far as basically the direction of the whatever ETF or stock that we're going to look at. We're going to look at the strength of the trend, if it's broken. And basically what I do during the week is I look at the daily chart. Now, what I've done here is I've flagged the strongest, ETFs right here at the top with a little blue flag as well. What does that mean? It means that this ETF is strong on both the weekly chart, where price, all right, is above the Tenkan-sen, which is the 9 period. Price is above the Kijun-sen, which is above, that's the 26 period. The highs and lows divided by 2. Very unique, okay? And you can see them right under the price there. The Chiku span, that white line, is actually today's closing price. And it's projected in a line form, okay? But it's projected 26 periods into the past. If that white line is above the candle 26 periods ago, that's very bullish. So that's good. So we've got a check mark there. Then you've got the cloud itself, the Ichimoku cloud. And that's comprised of 2 lines. The Senkou span A, the light colored blue line, which is essentially taking the midpoint, this moving average, the 9 period, and the 26. It's the absolute midpoint. If you project it into the future, 26 periods, that's where you will find it, the Senkou span A. We do want that to be above the Senkou span B. This line is derived by taking the highs and lows of the last 52 periods, okay, dividing that by 2, and that's plotted, okay, 26 periods into the future. So that's how the cloud is comprised. And as you can see, what Ichimoku stands for is at a glance. So at a glance, we can quickly assess, is this a strong trend, or is it a weak trend, or maybe it's somewhere in between? And so that's what I'm going to explain to you guys. We're going to look at the daily charts today. So here's the S&P 500, the SPY. Last week on Friday, okay, you can see it popped right back above the moving average, okay, securing the strength of the trend here. And so, yeah, it's looking good still. It was up 0.28%. It did create a reversal candle, though. That candle right there is called the spinning top. And when you see something like that, sometimes price may potentially reverse tomorrow. There's a higher probability of a reversal. This is what it looks like. It's a bearish single candle pattern. Wick on the top is equal to the wick on the bottom in length, roughly. And it's got a small body, like you see right there. So if you see that at the top of a move up, it could potentially lead to a pullback. No guarantees in the market, right? It's just a higher probability because it's telling us that the bears took control. Where price moved up, they took control, and it closed under the opening price today. So you can look at that on a 5-minute chart. The green line there is the opening price, the dotted green line. That's where it started, where price was this morning when price gapped up. But you can see that price actually closed under the opening price. Okay, that's what I'm talking about. So let's get into the rest of these now. So here, now that you know the rules, let's get into the rest of these. We don't really need to explain it for all of them. So here's the QQQ ETF, same situation. We got another reversal candle. This is also another spinning top / doji, which is also a reversal candle, but it was up 0.46%. Okay. Dow Jones, also another reversal candle. This is more called a hammer type candle. I'll show you guys that one as well. So it's I'm sorry, they call it a hanging man. After it move up, you get that small body and a wick on the bottom that's longer than the body itself. And you can see that is slightly longer, but it did hold up above the 9 period. Okay. So it's just not an ultra bullish candle, and that's obvious by the percent move up, just 0.16%. FEZ is the Eurostoxx 50 ETF. This looks stronger now. Okay, so the candle itself is actually more bullish, right? Because the opening, it basically price closed above the opening price. Okay, and just a quick little synopsis here of how to read these candlesticks. The opening price is the bottom of the body. The top of the body of the candle is the closing price, if it's a green candle. If it's a red candle, the opening price is at the top and the closing price is at the bottom. The wick at the top of each candle represents the high during the day, and the wick on the bottom represents the low where the price reached during the day. All right, doesn't really matter whether it's a green or red candle. So yeah, I like FEZ. And I said this last week too. I said Euro stocks look stronger going into this week compared to the US stocks. And the reason is because obviously there's some uncertainty, right, about what might transpire this week. You heard on the show what they were talking about. So yeah, so that's the thing I'd be watching is let's see how FEZ performs. Another thing I like about it is the positive DI is moving up, negative DI is moving down. Notice how the ADX is moving up here. That represents momentum when the white line is moving up and the positive DI is moving up and the negative DI is moving down. That's a positive momentum to the upside. So I like that. Russell 2000. All right, here we are. So here's what happened today. Russell 2000, okay, it did, in fact, gap up. It gapped up here. Whoops, my bad there. I just messed up a monthly level. Let me see, where is that? It's based on that candle, 244.46. Let me just make sure I fix that. Okay. There we go. And let's get back to the daily. Okay, so... And you know what? Let me take off the lines for a moment, just so you can see the technicals here with the Ichimoku. So what happened today is quite clear. You can see the price gapped up in the morning and then started to drop. And we can see that, of course, on we'll just throw on a 3-minute chart. Okay, there's the gap up. There's the opening price, and then it closed under that green line. And it just wasn't looking ultra bullish, obviously. So that's not good, even though it was up 0.12%. I would not be adding a position here. That's why it doesn't have a blue flag here, okay? And what does the weekly look like? This is the weekly chart so far. Overall, bullish, but these candles are not particularly super strong. What about the VIX? What happened today with the VIX? The VIX was up 5.56%, and it got back above the 9 period here. We don't want the VIX to be moving up because it represents volatility. It represents fear in the markets. And so that's what we could see some fear this week. We could potentially see a volatility spike this week. So be careful, be ready. One of the things I teach in the member only videos about how it's important to also, consider hedging your accounts. If you have investments in the stock market in an event where things start to basically spike like they did back in April. Maybe you guys remember back in April, early April, what happened here. The VIX jumped to a level of 60.7%. And of course, the S&P 500, this is what happened. It dropped approximately 15% in just a matter of like 8 days or so, or less, 7 days. All right, so that's the kind of thing you can expect when there's fear. All right, let's get into the stocks now. Again, the strongest ones are at the top. All right, there's basically 10 out of the 19 look pretty good. Let's start off with Applied Materials. AMAT is the ticker symbol. Now, it is above the cloud. It's above the moving averages. The only problem is we've got a shooting star reversal candle. So typically, I would not recommend adding a position here, because it is also quite a little bit of a distance from the Tenkan-sen and the Kijun-sen. These are the equilibrium zone, I would call it. All right, so I would hold off on that one. Alibaba, on the other hand, looks more bullish. You can see it got, actually, did it stall at that high? Let's see, 180.16. It did. It did not break above the high of this candle. So let's put that in there, 180.16. It basically closed right under it. So basically, you don't have confirmation yet of a breakout above that resistance level. So I'd hold off on BABA. CAT, Caterpillar. This one seems to be bouncing nicely off of the 9 period. I like what I'm seeing right here with this kind of like nice move. Caterpillar looks good on the daily chart. On the weekly, it also looks pretty good. Let's see, EA, Electronic Arts. I'm sure you guys heard about Electronic Arts and what happened today. Well, it gapped up and then it kind of lost steam immediately. If we look at, here's a daily chart. The weekly and the daily look the same. If we look at the 1 minute chart, let's look at the 1 minute so you can see what transpired throughout the day. Here's the time frame, the opening price. I mean, you can just, let me just fix that a little bit. Maybe I should use a 5 minute. Yeah, because the price basically stayed around the same level. So, okay, here we go. Here's the 1 minute. It's a little bit more clear to see. You can see that around, let's see, what time was it? Around this time, 12:43 or so. It got under the 200-day moving average. It was already under the cloud on the 1 minute. Let's find out what time it dropped under the 1 minute. Probably happened somewhere around here in the 11:18 a.m. And you can see that it's dropped. So up for 4.5%, but it was not a strong. This is not a strong candle. I would not be. It looks almost like a little spinning top. The wicks are really short, but I would not be adding there. Let's go to KLAC. That's the next one here. So KLA Corporation, technology sector, semiconductor equipment and materials is the industry. It did gap up in the morning, then started to drop. So that also doesn't look particularly strong. But with that said, it is above the moving averages. It's above the Ichimoku cloud, which has turned bullish here on both the daily. And of course, it's also very strong on the weekly. Like I said earlier, I've reviewed all these. They all look good on the weekly. KWeb. Crane shares CSI China Internet ETF is another ETF they talked about. This one gapped above the Tenkan-sen, but created a reversal candle. All right, it was up 2.14%. LDOS, same situation, a reversal candle, up 0.38% today, but above the moving averages. LRCX, this one too, also jumped, gapped up, and then towards the rest, basically spent the rest of the day dropping. And again, let's look at that 3 minute chart. Here it is. There's the opening price, and then it just spent the rest of the day just dropping. So that's why I would not recommend adding here based on that. Morgan Stanley. Yes, price is above the moving averages. The cloud is still in a strong uptrend overall, right? The big picture. And I like this one. Morgan Stanley, now this has more potential than those other ones I just mentioned because we do have a bullish candle. And you can see that price, okay, the closing price was above the opening price. Again, let's go back to a 3 minute chart. See, there's the green line. That's the opening price from this morning. It's above. That's higher probability now it's going to continue. TSM, again, this one, we've got a negative candle, but it stalled. It did stall at the 9 period, the Tenkan-sen right there, the green line. So I would not be adding based on this candle, but it stalled, and that shows strength still for Taiwan Semiconductor. All right, now the rest of these are going to be weak, and then we're going to see the difference in where price is in relation to the cloud, where it is in relation to the moving averages. Let's start with ETD. Perfect example here. You can see the consolidation. It's been stuck in this consolidated state. I would stay out of this. This is just a very noisy chart. It's inside the cloud right now. I'd stay out of that one. LMT is Lockheed Martin. Now this one does look really good on the daily chart. It looks pretty bullish, even though it does have a reversal candle here, and there's a higher likelihood of a slight pullback tomorrow. On the weekly chart, it's inside the cloud. That's why it does not get the blue check mark. Okay, so it looks like, the fact that it entered the cloud itself is a bullish sign because it didn't basically reverse course once it reached the cloud itself. It actually entered it. But the fact that it's actually building this type of negative spinning top, that's not a good sign, even though it was up 0.93%. NOC, Northrop Grumman Corporation, industrial sector, aerospace and defense. On the daily chart, the Tenkan is just about to cross above Kijinsen. All right, the Chikou span, remember we said earlier that the white line there, the Chikou span should be above price. Well, it isn't in this case, okay? It's inside the candle. So no on that, no on this. I like what I'm seeing with the ADX moving up on the daily. And on the weekly chart, it does look pretty bullish overall, okay? It's just those things that were out of whack as far as I'm concerned with NOC. RH, okay, look at this. This is a declining 200-day moving average right here, just dropping. And price is under the Ichimoku cloud right now, so no on Restoration Hardware Holdings. I'd stay out of that one. SBLK, Starbulk Carriers. This is the shipping ports industry, industrial sector. I would not consider this one, and the reason is you can see down below the negative DI, the red line is above the green line, that's negative. ADX is moving up. When that is happening, that's a bearish signal. Okay, you don't want that red line above the green line. It's telling us that the direction is not in the right, and you can see it on the price. It's been dropping. Now, one positive note, it did stall right at the cloud. Whenever I see that, that gives me hope that there could be a potential pop tomorrow because it stopped right at that level. But I would hold off on buying, obviously. And here's the weekly chart inside the cloud under the 200. No on SBLK. SEHW, Charles Schwab looks good on the weekly. I like this, right? This last week on Friday, it price closed above the 9 period, the green line. And this week it's continued to move up. It was up 1.5%. But let's look at the daily. Why does this not get the chart, the blue flag? Well, Tenkan is still under the Kijinsen. You always want that faster moving average to be above the slower one. That's usually, and Chikou span is above price, but just barely here. So it's, and the cloud itself, the future cloud, remember I said earlier, you want that Senkou span A above the Senkou span B. That's also lacking here, all right? And if you look closely, just based on traditional technical analysis, right, we've got ourselves, you can see here, that was like almost like a double top, right? Then we had a lower high from the prior highs here, okay? So that's not good. And so you'd want to, at a minimum, at least get above these prior highs, right? We do have a higher low here from this low, so maybe something will happen here soon, but I'd hold off. SWK, Stanley Black and Decker. Okay, this one here. Let me get rid of these lines. Okay, SWK. Oh, yeah, let's go back to the 3. Okay, boom. There we go. Okay, so SWK, Stanley Black and Decker. Now on the daily chart, price is under the moving averages, so that's a no-go right there. It's also under the 200. See that? And on the weekly chart, it is under the cloud and 200. So stay out of SWK, folks. Unless you like, you're a glutton for punishment and feel like, hey, this is going to take off at any moment. It's hard to really pick the right time. It really is. I mean, if we look at this one, let's look at WHR, for example, as a perfect example. This is Whirlpool, okay? Whirlpool Home Furnishings and Fixtures. Once price, go back, and all you need to do is do a little back testing with the Ichimoku, and you'll see how effective it is in keeping you out of bad trades. I think that's the key thing. Before you consider entering a position, if you just check to see what's going on with the Ichimoku, it might save you a whole lot of money, potentially. Because look at this over here. See where price started becoming becoming negative right about here, at that level where price got under the Tenkan on the weekly chart. So right at that point. Now, it spent the rest of the time dropping. Now, if we look over here, this would not have been a buy point because Tenkan was still under Kijinsen, right? And so if we measure from that point, let's go ahead and use the measuring tool here. We hold down. We drop this down all the way down to this level here, to the lows, all right, around that level. In 3.9 years, folks, you'd be holding the stock for about 3.9 years, and you would have dropped 67.87%. All you need to do is look at that box to the left at the bottom. Do you see where it says June 4th, 2021 to April 25th, 2025? 3.9 years, 203 bars, 67.87% drop. So that's huge, huge drop. And guess what? We're coming back to this same level again, right? So where it looked like over here something could have happened, we were still under that 200 declining moving average, right? So this one candle did show a sign of hope, but it didn't last long, right? It did not last long. It dropped, basically 2 weeks later, back into the cloud, continued to drop, right? Making a lower low from the prior low. And of course, a lower high from this high, right? So it's back in a downward channel again, basically. And it's still dropping. Another lower high here from this high. Not good. Also broke and closed under this low. Now, it might find some support right here. So if you happen to have a position in WHR, I mean, it couldn't hurt to hold for a couple more days, like maybe to see how price reacts to this level. This could be the bottom, but there's no guarantees. That's the key thing to keep in mind. All right, so let's go to the next one, WSM. All right, so we're looking at a weekly chart here. You can see prices under the Tenkan-sen this week. So it basically dropped a lot, down 4.65%. Here's the weekly chart. Here's the daily chart. Oops, daily chart. Entering the cloud, not good. Chiku span, underprice. Okay, the cloud is still bullish, but when you don't have all of the elements of this indicator telling you to go, maybe it's a good idea to stay out of it. Why? Because there's other options. That's the beauty of the stock market. There's a lot of stocks out there that look way better. So why pick the ones that are losers or look like they're going to be losers, potential losers, right? And we can manage those. Like sometimes you're going to have some stocks that are going to drop, and you can certainly manage those trades, but you don't want to enter a new position if things are looking pretty weak, is my point. Here's Tesla, folks. All right. It was up 0.64%. You can see it moved up. It created a reversal candle on the daily chart. Today, Tesla did something. It got a blue flag, finally. Why? Because in the weekly chart, the Senko Span A crossed above the Senko Span B. All right? That's about it. That's the only reason I did it. I would not recommend, I still am not recommending Tesla. Last time I held this position was back here. Let's go back in time a little bit. Back on December 17th, closed position on Tuesday. Hanging man, candlestick, pattern and distance from the Tenkan-sen led me to exit position on Tuesday for a 34.4% profit. It was from that trade there. And look at that. It led down to where it found support at the cloud, came back up. It's going to come and retest that 488.54 probably. I don't like what's happening here. You can see here's another interesting thing you should also pay attention to when you're like considering buying a stock. Look at the volume bars. You see how they're declining here on the weekly chart? So as price is moving up, volume is declining. That's also not good. Here's a daily chart. All right. Okay. Apple also has a blue flag, but it's stuck inside this ascending triangle pattern. It's got resistance at 260.10 based on these levels back here. That's more of a weekly level of resistance. Maybe I should change the color here to blue. Let's do that. That's another thing I recommend is if you're going to use resistance levels, make sure you color them appropriately. So the blue would be weekly. Maybe the red could be red. I'm sorry, the daily could be red. Maybe the monthly could be purple. That's how I've got it set up so that I know what levels I should be looking at. I can always switch around and check to see what time frame I'm looking at. I usually use yellow for daily I usually use yellow for like really short term, like under 1 day, So, Apple doesn't look terrible here. I'm not going to lie, but yeah, I'm also not interested personally in this holding a position in Apple right now. Here's Meta, and that's mainly because of the tariff situation. I think they're going to be impacted very badly because they have such huge exposure to China. If things start to fall apart there with the relations in China, Apple's going to be in a lot of hot water, folks, and it can happen very quickly. Here's Meta, more so than some of the other Mag 7 stocks. What about Meta? Well, it's been stalling here. Do you see this level? 796.25, and Meta has dropped. It has dropped once it came up to that level. That's not good either. That could potentially be a double top pattern, which is also a negative pattern. It's inside the cloud here in the daily chart. So I'd hold off. It does not have a blue flag. All right. And then finally, let's get into these other stocks here. Lyft, which I like. Lyft, I like. Why? Because it's pulled back. Okay. On Friday, you can see it popped above the Tenkan-sen here. Okay. And it's continued to move up today, up 4.85%, breaking that trend line as well. And if you look down below, the volume increased from the prior, from Friday's volume. It was almost double. Okay. So I like what I'm seeing. Now, the ADX hasn't started to, it was dropping. It looks like it's flattening out, and it's probably going to move up if we have another follow-up day where price continues to get above the high of that candle, which is 22.97. So that's what I'd be watching. As long as price, it looks like it's going to continue moving up. If we look at the weekly chart on this one, it's been finding support, at the 21.52 level. That's a monthly level, that purple level. You can see that right here on the weekly chart. I'll show you the monthly. Here's the monthly. Now, I make my decisions based on the weekly and the daily. I will say this. This will be an issue. Okay, the cloud itself, the monthly cloud, which is about 6.5% away, could potentially become an issue. But what I have found is that the daily and weekly obviously are going to lead this stock. And I like what I'm seeing here on the weekly chart, because here's the thing, right? We've got ourselves... okay, do you see this? A higher low here from this low. We broke through this high. Okay, so we're basically, I think, we've cleared this level from 2022, folks. All right, that's why I'm a little bit more optimistic about Lyft. I think that it's actually going to clear and continue to move up after this long consolidation. If we start seeing it, but I would pay attention to the monthly chart on this one, because price is so close to the bottom of the cloud itself. And so, yeah, it's something to just keep in mind in the back of your head. All right, here's Devon Energy on the monthly chart. And this one also will have some issues when it comes up to this level here. It's about 13% away from the Kijun-sen on the monthly. But here's the weekly chart. It's inside the cloud currently. Now, Devon, this is... Devon Energy Corporation, okay, energy sector, oil and gas. You can see going back in time, since on the weekly chart, things started to fall apart right around this area here where price dropped under the Tenkan-sen, and it never looked back. It just continued to drop from there. November 25th of 2022, it dropped approximately 62% in 2.5 years. Now it's starting to recover a little bit, so it's down only 46.23%. Here's how I would play this one, because it has started to show some strength here. Okay, the fact that it actually entered the cloud is a good sign. The fact that we have a positive, a bullish crossover of the 9 period crossing above the Kijun-sen. See that green line crossing above the red line? That's also bullish. Now, I would not recommend buying adding a position here, a new position, but if you happen to be holding a position here, you can manage this, right? You got the some potential where this thing could potentially move up. Now, let's look at the daily. All right, here's the daily chart. So after this long extended, you can see here, since, we're going back, like I said, to this was the highs were back in 2022. All of a sudden now, we have emerged above the Ichimoku cloud on the daily chart. We're above the 200-day. And another interesting thing I would also mention is the fact that once we broke through that 200-day, okay, that was a pretty bullish candle. It wasn't like playing around. If you look down below, okay, do you see how the ADX started moving up right around that point? So the momentum started to increase. It made that nice move up. Okay, so it's pulled back now, but this is a healthy, what they call a healthy pullback. All right, to the 200. Found support, moved up, came back, found support again at that 200. And bounced off of it. Now, today, it did drop 3.97%. But it held up above the Tenkan-sen and Kijun-sen. So it's really, at this point, you've got a future bullish cloud. The Tenkan-sen and Kijun-sen are around the same spot right here. The Chikou span is above price on the daily chart. I think, in this scenario, if hypothetically you've been holding this for a long time, you may want to hold on and see if it can come out of this negative decline that it's been in for so long, because it's starting to show some signs of strength, right? So you can manage it. Everyone's got to make their own decisions, however, about when they enter or exit positions. Okay, I'm not here to tell you exactly when to get in, when exactly to get out. But I'm trying to give some insights on how I basically trade, or how I would trade it. Guys, that's going to do it for this video. By the way, did you know that I made another video this weekend? It's a members only video. This is what it looks like right here. If you go to the homepage, Blue Cloud Trading, my homepage on YouTube, you will find that video here. It's a 1 hour, 13-minute video. I go over my entire portfolio, all the stocks that I added and closed out of last week. I also go into, I gave, I think, 22 new stock ideas for this upcoming week. All right. And I go a little bit more into more insight about my trading methodology and how I basically decide on adding or closing positions. And it could be useful. You know, I've been trading for over 25 years. I've seen it all pretty much. If you click on this link here, or the join button, to be able to see this, you would need, so a couple things. One, you can subscribe for free. It's free to subscribe. I'll come up in your subscriptions. You can see these daily videos, okay? And then if you click the join button, here's what will happen. This will pop up, and then you can become either a Blue Cloud supporter, okay, where you can request a stock be analyzed on an upcoming show, a Blue Cloud trader level member. Under this level, you'll be able to see those exclusive member only videos that I just mentioned, that video there. But what if you also want to get daily trade updates on my trades? Become a Blue Cloud Legend level member. So you'll be able to see those daily trades here under, next to the posts. Once you become a member, there'll be a new tab that pops up. I'll show you what that looks like. It will say membership. You click on that, that's where you'll see those daily posts, okay? You can find all this. If you scroll down, you'll see all the member-only videos that I've posted every weekend. And, oh, one other thing. Someone had some questions about the software that I use, right? So as you know, this is TC2000, okay? This is the TC2000. Now, if you guys like this whole platform and want to be able to do this at home for yourselves and maybe learn a little bit about, you know, how you can manage your portfolio. It's really easy, first of all, to create your portfolio list. Like there's a little plus button at the top, you click personal watch list. You can name your list whatever you want, right? And then you hit OK. And then here's what happens. It pops this thing up, and then you can add symbols. You can add Apple. You can add IBM if that's what you want. Okay, boom. See how it pops up all those different, and then you can select it, hit add. Okay, you can transfer from one list to another. Like I can grab Tesla here and just grab it and push it. Wait, hold on. Let me make sure I can do this. There we go. See that? Drag and drop. So that's kind of cool. And then you can basically also just click this little move window thing, right? Click that. You can put it wherever you want. Maybe you want it under this little box. Okay, boom, there it is. Okay, you can move these around. You can. That's the cool thing I like about this platform. It allows you to do that. There's a whole bunch of other things like the drill down section that you'd be able to use as well. Okay, where I go over the sectors each weekend. I go over the industries, which ones are strong in stocks. And then the other thing I wanted to mention real quick is, okay, so let's say that you like this, you know, the way that I've got this set up. Okay, the charts. Let me just show you guys something here. Hold on. So let's say that you like this. Okay, you can actually get the link for this. Let me show you real quick. Let's go to the 9 more links. So from the same homepage here, click 9 more links. You read a little bit about my channel, scroll down a little bit. This is where all the links are. And right here, TC2000. Now this is a video so that you can figure out how to like create the layout that I have. But if you want the cheat sheet, here it is. It's the TC2000 chart layout. It's automatic. You click on that. Okay. And then you can import this chart template from Blue Cloud Trading. Okay. And there it is, import chart template. So once you've got the TC2000 software on your, you know, you've already signed in, you can actually import the entire thing here. Let's see, what else? And then the software itself is also, you can find that in this link right here. Wait, scroll up a little bit. There's the $25 coupon for TC2000 software. So if you click on this link here, first you got to do this, right? You got to actually download the software. Okay. And then, as you'll see here, thanks for visiting from Blue Cloud Trading. You have an active coupon for $25 coupon. Okay. You enter your email, you download the software. It's that simple. And you can find out about pricing here. Click on the pricing. I would recommend, out of the software plans and data, I would recommend the premium, not the basic or the premium plus. That might be too much. I mean, I do use premium plus personally, but if you start off, you want to use the premium so that you're able to actually have real-time scanning and sorting. You'll be able to chart. You'll have the chart drawing tools like I do with the trend lines, where it allows you to, add trend lines on your thing. You'll be able to set up alerts as well. Monitor up to 100 customizable alerts. If you want more than that, go to the next level. You'll have 1,000 alerts. Okay. There's other features here as well. If you want real-time U.S. indices, $9.99 a month. Real-time U.S. options, $9.99. You can find out more from the page itself. And if you have other questions, you can also call their number, and they'll help you. I've been using this software for a long time. It's very useful. Now, the other software that I use is called FinViz Elite. I don't really have a affiliate thing here, but I did leave a link here if you're interested in this in the right here. Where is it? Scroll down. Where is that FinViz? Is it even here anymore? No, it's not. It's not here. But FinViz does have a free version too. Finviz.com. Okay. Finviz.com has a free version. I use the FinViz Elite. It's a little more expensive, but a lot more stuff that you can do with it, including they actually have charts as well, like the Ichimoku. You can find that here as well. And but it's harder to move around the charts on this versus the TC2000. So I strongly recommend TC2000 over FinViz. What this is good for, okay, is, let's go back to FinViz, the homepage here. This is how I can quickly assess what's going on in the markets, right? You've got this is the homepage. You've got your news tab. This is going to give you all the updated news from different sources. You can see the different sources over here. Let me zoom in a little bit so you can see what I'm talking about. So they come from Bloomberg, Wall Street Journal, Market Watch, Reuters, CNBC, Fox Business, BBC. If you have, it tells you by time. Click on the time right there. And there's the latest, right? So you can see what's going on. Trading day, U.S. shutdown deadline. It's coming up. That's the thing to worry about. What else is interesting right now? Anyway, you get the gist of it. Here under screener, you can do scans. All right. There's a whole bunch of things that you can select. If you want to find stocks in a specific country, you go to country over here. Maybe you just want Europe. Click on Europe. It will scroll down. You scroll down. It will show you the 290 stocks that are available to look at, like ABVX. Let's see. Let's find this. Let's take a look at this one, ACIU. You click on that. You've got a chart. This is, of course, this you'll only be able to get probably under the FinViz Elite, and you can see the performance for the week, the month, the quarter, all this stuff. So this is a little bit better for those of you who are more fundamentally, you like to look at the fundamentals. You're going to get the fundamentals on TC2000 too, by the way, just so you know. That is also an option there. TC2000, it looks a little bit like, here's a tab for fundamentals. Check this out. Here's Apple. All right, you're going to get information here in TC2000 as well. Guys, that's going to do it. Okay. Here I am selling this stuff. But I'm just trying to make it easier for you guys to also, get into this. This is kind of fun. I really enjoy trading. That's why I do this channel. I find it, it started as a hobby and have kind of turned it into a little bit more than that, right? Because I do like to teach. I do like to share my knowledge. And I think, I think everyone should be. If you have money in your 401k or in an IRA, guess what? You own stocks. Okay, you're invested, and you can check out your mutual funds through this as well. By the way, Anyway, guys, I'll catch you all in the next video.